Hello, in our previous episodes, we talked about how US tariffs will affect the global economy, and I mentioned that we should look outside the US for investment opportunities. We explored the potential of investing in Singapore markets and whether the Singapore markets is considered undervalued. You can watch this episode by clicking on the link above. Today, we shall look at a stock that most might overlook, that had gained a whopping 471% since its IPO. Sheng is currently the third largest supermarket chain in Singapore and is founded by Mr. Lim Hock Chi and his two brothers, Mr. Lim Hock Eng and Mr. Lim Hock Leng. Mr. Lim Hock Chi is also the current CEO of Siong. Their story is an inspiring rags to riches story. Hello everyone, welcome back to SDA Club, the club for stock trading and analysis. This channel is dedicated to providing you with high quality tutorials, guides and insights that demystify the world of trading. Join us as we will share more trading secrets and valuable insights. To stay updated and to be the first to access these valuable resources, hit the subscribe button now. By subscribing, you're opening the door to a world of trading and maximizing your potential for success. Before we dive in, here's a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. Let me now dive a little into Siong's success story. The Lim family moved into another farm in Punggol in the 1970s. Years later, the farm experienced an excess supply of pigs. Thus, Lim Hock Chi and his wife rented a small section within a Safewell provision store in Ang Mo Kio to sell chilled pork from their pig farm in 1984. The following year, in 1985, following the move to phase out pig farming by the Singapore government, the Lim brothers ventured into the retail business by launching Siong's foremost operation in the single shophouse unit, together with an ex-Safewell managerial staff. The store initially focused on providing a wide range of no-frills products and increased sales by accepting lower profit margins. Other cost-saving measures included employing less staff and avoiding the use of in-house plastic bags. Siong has since evolved into a chain of 77 stores, mainly supermarkets, in Singapore. Since its initial public offering on 17 August 2011, shares of the supermarket operator have surged significantly from its IPO price of 33 cents. Siong's last close was $2, registering a gain of more than sixfold for those who held on since its IPO. But hold on, that's not all. There are still the steady and increasing dividends that the supermarket operator has paid out over the years. These dividends would have added to the gains an investor would have gotten should they have reinvested them. At the end of 2011, the group only had 25 stores around the island. By 2018, this number had more than doubled to 54 stores. Even during the COVID-19 pandemic, Siong managed to open at least one store per year, taking the total store count to 69 by the end of 2023. 2024 saw a sharp jump in the number of stores to 75, and with 2 new stores just opened in the first quarter of 2025. Siong's store count stood at 77 as of 31st March 2025. Siong's revenue and net profit also climbed in tandem with the increase in the number of stores. The retailer's revenue was just $578.4 million back in 2011, but has since more than doubled to $1.43 billion by 2024. Net profit did even better, leaping more than fivefold over the same period from $27.3 million to $137.5 million. Siong's annual dividend per share has also more than doubled, from 2 cents to currently 6 cents. The group has displayed continued growth for the first quarter of 2025. Revenue rose by 7.1% year-on-year to $403 million, while net profit increased by 6.1% year-on-year to $38.5 million. Siong secured an additional 6 retail locations, which are expected to open by third quarter 2025. Of these 6 locations, 2 of them, Kinex and Cathay Building, are in private retail locations, a first for the group. Another 4 tender results are also expected to be announced soon, which means the group could potentially add more new stores under its belt. Once these 6 locations open, Siong will have a network of 83 stores around Singapore. The growth in Siong stores is in line with the build-up of HDB flats in new and existing estates. From 2021 to 2025, HDB exceeded its target of launching 100,000 built-to-order flats. The government is also slated to deliver the keys to 19,000 households in 2025. From 2025 to 2027, more than 50,000 new HDB units will be launched as part of Singapore's effort to build more flats for its growing population. With these plans afoot, Siong should have more than ample shop spaces to bid for new estates. Its 2025 pipeline of new stores looks promising, but it looks like more growth can be expected within these new BTO launches. We have seen how the retailer has grown its top and bottom lines in line with the growth in its store count previously, and this trend could be set to continue. Investors can expect the group to continue doing well as it extends its presence into new areas and also into private retail spaces. Let's now take a closer look at how much you would have gained over the past 14 years if you had invested 1,000 shares of Siong at its IPO. Since its IPO almost 14 years ago, Siong shares have gained 471% to close at $2, meaning your investment would have increased from $330 to $2,000 today if you had purchased 1,000 shares. From 2012 to 2024, the total dividend per share distributed by the group amounted to 57 cents. With the total dividends received, this is even higher than Siong's original share price of 33 cents. With 1,000 shares, you would have received a total of $574 in dividends over these 14 years. This sum in dividends alone is already greater than your initial investment of just $330 into Siong. Therefore, your original $330 investment in Siong would have leapt more than sevenfold and would have delivered around 15.4% compound annual growth rate. This is better than the Singapore index's compounded growth rate in the past 14 years. Can Siong share price continue to deliver stellar results that could beat the STI index returns? This will remain to be seen, but for now, Siong's growth does look promising, and you can consider diversifying some of your funds and put this stock into your investment portfolio. For more information on how you can optimize your portfolio and would like to seek advice on your current investment portfolio, speak to us by replying to the WhatsApp link in the comment section below, and our team can provide a personal touch and talk to you about your investment plans. Goodbye and see you in my next video. For more information on how you can optimize your portfolio and would like to seek advice on your current investment portfolio, speak to us by replying to the WhatsApp link in the comment section below, and our team can provide a personal touch and talk to you about your investment plans.